Welcome to Above Average Agents, where we spill the real estate tea on everything agent and real estate related. And I am Tiana Ponti.
I'm Lucie.
I'm Meghan Romanelli.
Getting a little rusty there on that opening, but welcome, ladies. I really wanted to talk today about investment properties. I am going through some tenant turnover and was starting to consider maybe I sell my own investment property or I trade it into something else. So let's talk investment properties. If you guys were to buy anything, what would you buy? Where would it be? And why would you buy it?
So if I were to buy anything, I would probably I would stick to where I know. So I do not yet have an investment property. I know you guys both do. So being a bit of a amateur at this, I think that being able to see the property and be close to it and be there to help quickly if needed, and knowing the markets and knowing the demographic of the markets is something that would be really important to me. So I would think probably Hope Sound, or there's a few neighborhoods in Jupiter that I'd probably want to buy into. Hope Sound would just be a little bit easier of an entry point. So that is where I would, but mostly because of that, that kind of getting my feet on the ground with it.
So you would buy like a single family in Hope Sound?
No, I probably maybe. I mean, if it was I definitely would buy in a no HOA. There actually on my street, there's a couple houses that are smaller. They have a lot smaller yards. I would love to buy one of those. So, but a no HOA community, it doesn't have to be a single family. It could be I don't know, probably a small single family, but not necessarily.
Meg, what about you?
Yeah, so I have an investment property. It has recently been a little bit of a pain in the butt. Um, to Katie's point, I am in an HOA, which is difficult. So I like your decision to possibly stay away from one, because we had a rather large assessment this year, which will set us back, technically speaking, on a cash flow basis. Now, when I look at investment properties, I'm thinking long-term hold. So I try not to get frazzled by this assessment this year and maybe we didn't make any money, but it's in 5 years, what's this going to look like and what can we do to help? Oh gosh, I'm forgetting the term. That's embarrassing. When you do a tax depreciation, so you can use that asset to help offset your income in the real estate business and different things like that. So I think of it hopefully in a broader spectrum and more long term, because it is a little bit challenging. We also had the tenant break the lease early, which has been difficult. And now we have seen some damage to the property. So leading into where and what would I buy? I would definitely go single family home, non HOA in my farm. So I would like to keep it in my neighborhood so that I can take care of it. To Katie's point, we had some flooding and I was able to run over the second that I heard about it and fix it and take care of it. And unfortunately in South Florida, the hit and miss is I want to be close to manage it. The downside to our market is you almost can't afford a property manager because our margins are so slim. Unless you get this amazing steal of a deal or you pay cash and you don't have a mortgage, if you pay a property manager 10% or 8%, you're probably not cash flowing. So at least in my farm. Now, maybe different markets, that's why you guys like those markets, but in my farm, you can't really do that. So that's why proximity is great. So I can go pick up a check. I can go make a repair. I can coordinate. So I would probably look at single family, non HOA, close to my house so that managing is not super stressful and doesn't take too much away from my business. But you're never going to have a passive investment property unless you do maybe go out of state. I used to daydream of places in Texas or something where I can buy this townhome and have someone manage it and just collect checks. Although I don't know those markets and I think that's make believe. I don't know if it works that way. So curious your input.
That's so funny. I used to listen to Bigger Pockets podcast, and they would talk about houses in Ohio or something where they're like 100 grand and they make, 1100 a month and you have a property manager and all this stuff. So I was trying to convince PJ at one point to invest in Ohio. Like, I've never even been to Ohio. Why would I invest there?
I'm from Texas and on Instagram, that's where I get my information. Spring, Texas has all these great townhomes that are so cheap, 250 and they rent for 3,500. And then I reached out to my realtors in my network and they're like, that doesn't exist. It's not real. So yeah, that's why I chose closer to home because at least I know what I'm getting myself into.
That's so funny. Have you guys thought about a cost segregation for your investment property?
We didn't do it this year, but we probably should next year. Yeah, absolutely.
Ours cost about we did it on ours because we put in a lot of renovations into it. And so our CPA was like, "Oh, it would be a good year for you this year to finally, do a cost seg." And we paid I think like 5,500 and we're going to save like a good amount. Like I'm very happy with it, but at the same time because you're bringing forward all those deductions like up front, he's like you have to hold on to it for at least, 4 to 5 years or you have to pay it back. So but we're in this point now where my husband and I are like, so if I were to buy a property, I actually want to sell this thing because we're tired of dealing with the average tenant and I want to buy a commercial property. But I don't know anything about commercial. So I'm like, I'd have to hire a commercial realtor to help me like really understand the math because it's all just a math game and really understand the equity that we have in this rental property now, how can I really maximize that? Because we bought in September of 2020 and it was like right when everything was like still dirt cheap. So I'm like, okay, so we bought our property for 285 in Delray, which nothing in Delray, and it's a multifamily house. So it's grandfathered in multifamily in a residential neighborhood.
So why would you get rid of it?
I know
Don't get
because
rid of it. You're crazy.
I know it's cash
I'll
flowing.
buy
Well,
it.
you could do really well. You could double your money in 5 years.
We doubled our
Yeah.
money in 5 years.
I mean, that's an incredible investment. I don't know. It's tough.
I know it's tough, but long term, like, we can't just think about right now, it's like long term, what would a commercial property do? Because commercial properties, they have triple net leases. So those people are paying for the taxes and all the repairs, and no one's calling you.
Right.
And they're like
At one
5-year,
point you wanted
10-year
an
leases.
office, Katie. No?
Yeah, that shifted plans, at least for the coming years.
Yeah.
So yeah, so I don't know. I'm doing some exploring. So I think personally I would do a commercial property and see where that goes. But I'm like, I don't know what that entails. And, it's like the devil you know versus the devil you don't. What risk do you take and what's your risk tolerance? It all goes back to your own personal risk tolerance and what you're able to, if we didn't have any tenants at all, could we still afford payment on it and all that fun stuff. So taxes, oh my God, a lot of stuff.
Yeah, exactly. I think my risk is rather low. So I choose close to home. I can keep my eyes on it.
Right. Yeah, ours is like 10 minutes from our house. So I totally get that. Makes it easy.
But yes, looking to investments, look at them from all angles, right? Because cash flowing in South Florida in particular right now is very difficult. We're not seeing 6, 7, 8% cap rate. Like that's not really a thing. So in my personal position, like mine is looking for land. So we're in with a couple different individuals and we have 4 out of 6 of these like villas. And eventually we're going to push everyone out. And then we'll have a plot of almost an acre in our residential area that hopefully we can sell to. So while I lost this year, I'm thinking way down the road what this could look like. So that's a good, a different way to see it so that you don't cry every time a microwave breaks and there's termites and the light fixture's broken and there's
And that's
fl-
why you don't buy real estate if you don't have any money whatsoever. Because all those like internet gurus who are like, you don't need any money to buy real estate. It's like, yes, you do.
you need definite money. Definitely. You
You don't
need
need millions of dollars, but you definitely need some slush funds in case the microwave breaks, in case the baseboards get ruined, like just little things. Because you also don't want to have um, a rental property that is in crappy condition because then you're not going to get great tenants who are going to take care of it. You want people who are going to take care of it and tell you when things are broken. I have to like reiterate to my tenants, tell me if it's broken, tell me if it's broken. Like one of my tenants had the washer broke and they didn't tell me. I only found out because I said, "How's everything going? You have to sign the renewal. Is anything broken?" And then he told me. I'm like, "We would have fixed that for you. Like we're not crappy landlords that are going to like not fix what's broken. Like if we're charging you rent for all these amenities, like they should be working." So,
right. That's yeah, in my position. She turned the power off when she left, but our lease still had a week. And then there was a leak and no power. I'm like, you do realize mold will grow that way, right? You
Yeah,
should
you
let me
shouldn't have
know
told
that
you.
you plan to turn the power off.
Right. So,
Good
well,
times.
rental properties are always so fun. Yes, it goes back to your risk tolerance, what you're able to handle, and if you personally want to do it. Not everybody wants to do it. Katie, you want to do it. You just haven't at
Totally.
this point.
Percent.
Yeah.
Yeah, I've had some personal stuff that I'm doing first that I'm gonna do it. I have a low risk tolerance. I need to kind of get over and just do it. I have a lot of opportunity to do it, so I just need to. But it may be 26, but probably 27, depending on how a couple things go.
Yeah.
I think it'll be good. I think my husband will be good at actually managing that. I don't think I'm gonna have to do that much besides find it.
Yeah. That's how it is with my husband. I'm like, he's the handyman and he talks to the tenant
Yeah.
and I just get it rented.
Right. Exactly.
And I find the properties and I get them rented.
Right. Right.
So, all right, ladies. Well, if anybody else has any good suggestions or points that you want to make regarding rental properties and buying your own rental properties as realtors, let us know in the comments and follow us for more information.
Bye.